Have you guys ever had Spindrift? It's so good. Hello and welcome back to another market update. That's right, yet another one. Today is Tuesday, September 13th, 2022. And before we jump into inventory, if you like these videos, if you find them informational at all, hit that like button, subscribe if you aren't already, comment down below if you have any comments or questions, as I'm more than happy to get back to you on that. Let's jump right into inventory. Inventory this week, we have 19,207 active homes on the market, and that is up week over week from being at 18,980 active units. Last week we had a 1.2% increase yet again this week, just like last week. So again, we're seeing inventory stabilize. Interest rates are continuing to creep up, which is causing that inventory level to continue to creep up as well. But we're just seeing a stabilization of this inventory, a plateau effect basically of inventory coming to market. So 1.2% increase this week, same thing last week, and we are going to see another increase by the Fed, I believe. So we should see probably some more inventory come to market. We might be at 20,000 by next month active units, and this means a lot. You know, we can have a ton of different things come from this. We can have some more deals come from this. We can continue to see inventory creep up. It all depends on inflation right now and what the Fed does with interest rates. So let's talk about why inventory is going up. Interest rates are continuing to creep up. Like I said, they were at around just over 3% at the beginning of this year, and now we are at on average around 6.1 to like 6.25, something like that. And so interest rates continue to go up, and that is because of Jerome Powell's devotion to fighting inflation. He said this in a speech a few weeks back that he is not done. He wants to fight inflation until this thing is eradicated. And what that means is the market came back and they priced in a 75 basis point hike, which basically means, hey, we know that you're going to hike this when you meet at the end of the month. We're going to go ahead and price it in the market right now because that's what we think is going on. So that's why we've seen interest rates specifically go up in the past few weeks. Interest rates will continue to do this, like I said. And I kind of just want to walk you through an example of interest rates and how much more that is causing home prices to be monthly. So in our first example, we're going to do $450,000 house, 5% down, and a 6.11% interest rate. And that's just what bank rate this website pops up and populates. It's just kind of an average rate of the market at that point. And with all the different things, 5% down, $450,000 house, and a little bit of PMI, you're going to be at a $2,879 monthly payment, $2,879 a month. And that is a big increase for the same house earlier this year. So we're going to do our next example, $450,000 house, 5% down again, but with a 3.25% interest rate, and that with a little bit of PMI is going to be $2,146 a month. So that's a $733 difference, and that is quite a bit. Practically, that's like someone going out and buying a $45,000 brand new car or not. So, you know, that $733 a month is quite a bit to a lot of people, and that is what is driving sales to be down, and why price cuts are happening, and why demand is going down, because it's just more expensive. It's basic laws of supply and demand. If something is going up in price, then demand is going to go down, and you know, and that's what's happening right now. We've had a huge increase in pricing just from the beginning of this year, and that's causing sales to be down. So, and I talked about this in my last video, but sales are down. Over the past month, this time last year, we had about 40% more sales than right now, and that is because of a few different factors. One, no one is moving because they locked in these awesome interest rates, right? My wife and I bought our house beginning of 2021. January is when we closed in 2021, locked in our interest rate at 2.75% and have a great mortgage because of that. And if we would, you know, buy the same house at that same price, at a 6 point whatever percent, I mean, we would have a much different payment. And so that is what's causing. Practically, it's just rates have gone up so much that it's more expensive for first-time home buyers, and it's also more expensive for those who are wanting to move because they may have refinanced. They may have bought 5-10 years ago, maybe have had the house for 15 years, 20 years, and have done a few refinances in between. They're still owe money on the house and refinanced when it was at its all-time low, like 2.6 or something, or even just, sub 3 or even around 3, their monthly payment is nothing. If you have, parents or friends out there that have owned their house for 15 years, their monthly payment is going to be next to nothing because of those interest rates. When they bought, interest rates were probably around this point now, but the house price was much lower, obviously. So it's, it's showing that it's becoming a bit too spendy for people, and that is what is causing demand to go down, causing prices to go down. Like I talked about in the last video last week, prices are starting to come down a little bit month over month. But the good thing that is coming out of this is deals are here. They're popping up on the market. One company that owns a ton of inventory right now and is slashing their prices like crazy, as you guessed it, Opendoor. Opendoor really bought a lot of houses in Q2 of this year, and that caused them to be very asset heavy and have hundreds of millions of dollars in assets that are just sitting on the market now, can't sell because the demand is not there. Opendoor, tends to list their houses a bit high, and that is causing them to really just slash their prices. They're spending a ton of money on those. They're really trying to get those sold. All right, next let's talk about CPI, and CPI is kind of the main subject of this video just because it came out today. It came out around 8:30 this morning Eastern time, and it is some bad news. Basically, CPI came out as a 0.1% increase month over month, and the market is really reacting to this. The market is not liking this. I think the S&P was down like 3% as of that announcement. You can see a real sharp decline in their stock price there. But I kind of just want to go over this different sectors of the CPI with you and just kind of walk you through what this is made up of. So we can see, I'm just going to have this on my computer off screen here. The CPI itself, we see that food and energy are down. So all items, we see at the top there, we have a 0.1% increase from July to August. And again, this is August numbers coming out in September. September numbers will come out in November. I'm sorry, September's numbers will come in October. I know, in months. So we had a 0.1% increase from July to August and a 12-month unadjusted increase of 8.3, so 8.3% higher prices this year than last year. And you can see in those numbers we have a lot of decreases in the food and energy sectors, specifically in the gasoline. We saw energy, commodities, gasoline, all types. We saw almost a 3-point decrease and 3 percentage point decrease in cost, right? From -7.7 and -10.6. But again, this is 25.6% higher than this time last year. But one thing that caused this increase is going to be all items less food and energy. So all other items except for food and energy, or all items except for food and energy. And we see a ton of increases here. The only thing that's not increasing is medical care commodities. So we see a lot of increases within these, and that is causing a 0.1% increase, and the market is not liking it. So we're basically starting to just kind of stay where we're at with inflation. The market doesn't like this. I'm guessing the Fed will not like this as well. And we will see when they meet at the end of the month what they're going to do with this hike. And what's really concerning is it's a 0.1% increase, yet we see gas prices practically in our everyday lives and also on this chart go down quite a bit. So we are going to really have Jerome Powell come out and raise these interest rates, and that is not going to be good. So What does this mean? What does the CPI news mean? Well, it means that we are likely going to see that 75 basis point hike for sure that the market has priced in, and we will see where it goes from there. We have quite a fight ahead of us, as Jerome Powell would put it, to get inflation down and affordability up. And so we are going to see interest rates continue to go up from the Fed, and likely from there we will see what they do for mortgage rates. Next, let's go ahead and talk about the Cromford report. We talk about this every week. The CMI Cromford Market Index is basically how many buyers to sellers out there. So we just divide it by 100, and that gives us our number. So our CMI right now is at 105.2. So if you divide that by 100, we're at 1.052 buyers for every seller or every listing out there, and that is down 0.1 from last week. Supply is up from last week. This week it's 76.4, and that's up from 75.9 last week. Interesting part is demand is actually up from last week. So people are coming back and buying houses, and it's showing that demand is up from 80.4 this week, and that's up from 79.9 last week. And that's just basically, I would think it's because this lags a little bit, and we saw interest rates go into the 4s for a little bit, probably 3-4 weeks ago, and then go up from there because of Jerome Powell's message a few weeks back, where he said he's not done fighting inflation, and that's where the market came in and said, hey, we're gonna put in another 75 basis point hike, which is likely to come. With my own clients, I'm seeing, again, more interest. I have some people looking that want to put offers in, that we're just getting them pre-approved. They're seeing the deals on the market, especially if you're cash heavy. You're realizing, hey, these are some deals we haven't seen in a long time. I really like this deal, so I want to go in on it. So seeing a lot more buyer kind of reflect that buyer CPI, I'm sorry, that buyer Cromford report stat. I'm seeing that being backed up by people seeing deals and want to get in. But with sellers, it's just tough because it's still hard to get a home sold relatively quickly, and for clients to actually realize that the market has changed quite a bit. So that's what's going on. And in conclusion, we had CPI go up. We're going to see likely that hike come from the Fed. Interest rates are going to continue to be high, and demand is going to continue to be low. Not the best news this week with this market update, but it's relevant and it's true, and that's what I bring you every single week. Thanks so much for watching this video. If you like this video or find it informational, hit that like button. Subscribe if you aren't already, and comment down below if you have any questions. My name is Riley Rhodes with Team CR Realty, where Arizona real estate is seen.